today's lesson is on CSEC accounts, where we will be focusing on manufacturing accounts, part 2. I am Latoya Chambers-Hogg, your teacher for this morning. We are going to take it nice and slow as we look at other aspects of a manufacturer's final accounts. Emphatically, we will be focusing on the manufacturer's trading and profit and loss account. However, before we delve into today's lesson, let us establish our objectives. What is it that we really intend to achieve today? At the end of the lesson, students should be able to outline correctly the items in the manufacturer's trading account. Secondly, students should be able to distinguish clearly between a manufacturer's trading account and a sole trader's trading account. Students are also will be able to calculate accurately a manufacturer's gross profit. Students should be able to explain the different types of expenses in a manufacturer's profit and loss account. Last but not least, students should be able to calculate correctly a manufacturer's net profit. Sounds practical? Let's go. Now, what I want you to bear in mind is this. When we're examining a manufacturer's trading account, we are going to focus on what we call the finished goods. In the previous class, we explored the stock of raw material as well as the stock of work in progress, which were used or which were needed to calculate the manufacturer's cost of production. However, again, for the trading and profit and loss account, we will be focusing on the stock of finished goods. Now, students, listen carefully again. We will not be focusing on the stock of raw materials. So, for the previous lesson, where we looked at bellyful patties, we would not be considering now in details the stock of the flour or the wheat that is being produced, or sorry, that would be used in the manufacturing process. That's raw material. Neither will we be focusing on the stock of work in progress. What we will be focusing on is the stock of finished goods. Yes, delicious patty, finish, ready to bite into. So let's go now, students, into our final accounts for the manufacturer. Again, we're using the name bellyful patties. In the trading account, the first item that we will consider is that of sales. Now, students, this would be basically similar to that of a sole trader. Yes. However, because we're focusing on stock of finished goods, look what is going to happen now. We will not only just say sales, but we're going to say sales of finished goods. I am going to zero in on the word finished. Stock of finished goods. Now, in my example here, my stock of finished goods is $200,000. From it, I am going to less my returns inwards. But this time again, I am going to say of finished goods because we are focusing on finished goods. The stock of finished goods in this case is $2,000. We're going to subtract the $2,000 from the $200,000, just as I would do it for a sole trader. What we would get is an adjusted sales figure, which is our net sales of finished goods. Thank you for finishing it up for me. Finished goods. And that answer will be $198,000. Now, here is where we are going to do some transference. We're about to calculate in the trading account the manufacturer's cost of goods sold. But again, we're going to say cost of finished goods sold. If you can recall, in subsequent class, I had taught you in previous class, I had taught you a mnemonic or a memory aid to help you to remember how to calculate the manufacturer's cost of raw material used. Remember, only pet cats rest on neat, comfortable, cozy cushions. You should. Well, we're going to borrow this mnemonic for today too, as we seek to calculate the manufacturer's cost of finished goods sold. What we're going to do though is just a little adjustment, students. So, in refreshing again, the O is for only, which represents our opening stock. The P is for pet, which stands for purchases. The C is for cats, which stands for our carriage inwards. Our O is for rest on, which represents our returns outwards. N is for neat, which stands for net purchases. C is for comfortable, which stands for cost of raw material available for use. Then we have another C, which stands for cozy, which is for closing stock. Then we have yet another C, which is for cushions, and this represents our cost of raw material consumed. Now, that was for the manufacturing account. For the trading account that we're zeroing on today, we are going to just tweak it a little. What we're going to say is this: only pretty pet cats rest on neat, comfortable, cozy cushions. Let's go again. Only pretty pet cats rest on neat, comfortable, cozy cushions. Now, students, the question is, what's different? Pretty. Yes. Pretty has been inserted for you to remember a particular item that you cannot forget when you're doing the manufacturer's trading account. It really stands for our production cost of goods completed or brought down. Now, let's see how all of this will fit into the trading account. So we start with our sales of finished goods. We less our return inwards on finished goods, and we get to our net sales of finished goods. We're now about to calculate our cost of finished goods sold. So, here we are. Our only, the opening stock, yes students, will be inserted first. Then we're going, in this case, our opening stock is $10,000. We're then going to add to our opening stock our production cost of goods completed. That is the pretty. So we have there now only pretty. Let's see now what's the pet. We then will have to add in our purchases of finished goods. In this case, our purchases of finished goods happen to be $2,000. Now, in order to carry or having bought the finished goods, the manufacturer can't just walk with all those goods in his hands. So he has to pay to carry in those finished goods. So therefore, it's going to increase his purchases cost. So it beholds him to add in his carriage inwards on finished goods. So here we are with figures: $68,000, $2,000 for purchases, and $500 for a carriage inwards. We do our addition, students, and what we get here is our total, to which we will subtract $1,000, which is our returns outwards on finished goods. And this returns could be made simply because the manufacturer may have bought extra items that he normally would produce, possibly to fill an order, but they were faulty, so he had to return them. So we would less the returns outwards on finished goods, and then we would get our net purchases of finished goods, which is $69,500. We then add the $69,500 to our opening stock of finished goods, which is $10,000. When we add both figures, we get a total of $79,500. And that represents, again, our cost of finished goods available for sale, $79,500. Now, students, let's see if we can put it together. The mnemonic that I taught you before. Only, pretty, pet, cats, rest, on, neat, comfortable, cozy. Two other C's are missing. What could they be? Let's go. So we have another C popping up, which is our closing stock of finished goods. We are going to less our closing stock of finished goods, in this case, a figure of $4,000 from our cost of finished goods available for sale. And that will give us our cost of finished goods sold, an amount of $75,500. Pretty similar to that of a sole trader's trading account, isn't it? We will now less our cost of finished goods sold, which is $75,000, from our net sales, and that will give us our gross profit. The gross profit sum in this case is going to be $122,500. Students, again, in setting out to do a manufacturer's trading account, it is pretty similar to that of doing a sole trader's trading account. However, you must focus on the stock of finished goods. And you cannot forget, Miss Pretty, you must add in your cost of production completed, or cost of goods completed in terms of production for the year. This cost of production figure, students, will be coming from the manufacturing account that we did in the last class. All right, we're going back to our presentation. But before we go deep into it, it's trivia time. Let's think. Wow, my thinking cap is on. Are you wearing yours? The first trivia question is, what type of stock is taken into consideration in a manufacturing entity's trading account? Is the answer A, raw materials? Is the answer B, stock of work in progress? Is the answer C, stock of finished goods? Or is the answer D, stock of semi-finished goods? The answer is coming up later. Here I have for you a second trivia. How do we treat the total cost of production of goods completed in the trading account of a manufacturing entity? Do we A, subtract it from sales, B, add it to the opening stock of finished goods, C, less it from purchases of finished goods, D, add it to our net sales? Your thinking cap is on. Answer will come shortly. Now, let's look at the manufacturer's profit and loss account. So we've looked at his trading account. We're now going to look at his profit and loss account. Are you ready? Let's go. Please note, highlight, grab your pen, grab your paper. Well, you should have had that with you before because school's not out. And I pray that you're taking your key points. Note that in the profit and loss account for a manufacturing entity, we have 3 groups of expenses. 3 groups of expenses. You see, accountants have to be very orderly. We must classify all the different expenses that we're dealing with on a day-to-day basis. So it behoves us that for a manufacturing concern or a manufacturing entity, that we group these expenses in an orderly manner in the profit and loss account. What are these expenses or groups of expenses? These are 1, administrative expenses. When you're at school and you see the word administrative office or you hear administration, what comes to your mind? Yes, that same place where the secretary sits, don't it? Admin office. It therefore means that you see the admin expenses for a manufacturing concern are related to the office, because on the premise we could have the factory on one side and we could also have the office on the other side. No, it's one business but different sections. It therefore means that we have to separate and classify the different expenses. Examples of admin expenses are, or just before we go to the examples of the admin expenses, let's just finish off the groups of expenses. So we have the selling and distribution, which is a second group. And then we have a third group, the financial charges. Now let's zero in on what the admin expenses are. Administrative expenses, students, are those related to the office, as we said earlier. It therefore means that examples are office light, depreciation on office machinery. Now remember, our one premises, as we would have said in our own language here, right? If the light bill comes, factory using light, and office also burning light. So what we will do, we will probably ratio the light bill. Office might pay 1/3, factory pay 1/3, yes. So therefore, or if the office may get its own light bill, I don't know. But just remember that the office expenses are administrative expenses and they must fall under such heading. Now, we're going on. A third expense that is related to our office would be office rent. So anything that relates to office falls under administrative expenses. Then we have the second group, which is our selling and distribution. Selling and distribution expenses. What could that mean? Selling the goods, distributing the goods. It sounds to me like the customers are now involved at this point. Yes, selling and distribution here simply mean those expenses that we incur in getting the goods to the customer. What are some of these examples? We have one example, salesman wages. You know, the salesman is involved in basically distributing the goods. So the money that we pay him to do all of this would fall under selling and distribution. Then the delivery van is also used in the delivery process or in the distribution process. So therefore, any cost relating to the delivery van, such as its depreciation, it must fall under selling and distribution. Now, students, moving on, we have our financial charges, which is another heading. Examples of financial charges are bank charges. And you know, of course, if the manufacturing concern has a bank account, you may find that the bank may charge the manufacturer to carry out certain duties on his or her behalf. That's a financial charge. Then we have also discounts allowed as another example of financial charges. Now, let's put it together in bellyful profit and loss account. If you notice, the profit and loss account is being started with the gross profit figure. Students, remember that the gross profit ends the trading account but begins the profit and loss account. Again, the gross profit figure ends the trading account but begins the profit and loss account. Therefore, the first item in the profit and loss account is the gross profit. Let's zero in on that. It's the same gross profit figure that we calculated in the trading account. So all we're going to do is to bring it down. But because this is a vertical way, we still maintain it right here as gross profit CD. In the exam, even though you may not get a full workout, just remember that for accounts, they can take bits and pieces of the full accounts and ask you to do calculations. What you will do after you've inserted the gross profit CD figure, students, look carefully to see if the business has obtained or earned any other form of revenue. You're going to simply add any additional revenue that the business may have earned for itself to the gross profit figure. In my case today, I have one example of an additional revenue that Bellyful Patties had earned for itself. And this is commission received. The figure that we're working with for commission received is $7,000. What do I do here, students? I simply add the $7,000 to the $122,500, which was my gross profit figure. That will give me a total of, see if you can calculate before I do. All right, guess you were quick, just like me, $129,500. Now that would be your total revenue. Students, we're now going to place our expenses, because in the profit and loss account, we're working to calculate our net profit. So we're going to subtract all our expenses now from our total revenues to get our net profit. Let's go. The first set of expenses that we have, as I had outlined to you before, are our administrative expenses. My example for bellyful patties is office salaries. Office, yes, money that we pay out to the secretary or the other members of the admin staff, office salaries. The figure for me is $5,000. The next expense that I have is selling and distribution expenses. My example here is depreciation on delivery van, a figure of $4,000. Then we have financial charges. My example here, bank charges, a figure of $1,000. What we do here now, students, is add all our expenses, the $5,000 plus the $4,000 plus the $1,000, and we get a total of $10,000. We then subtract our total expenses from our total revenue, and that will give us, finally, our net profit. The net profit figure here would simply be, how much did you get? It should be $119,500. That's our net profit figure. Earlier on in the presentation, you were asked some trivias. Now let's see what are the answers, or what were your answers. Question number 1 was, what type of stock is taken into consideration in a manufacturing entity's trading account? What was your answer? I pray you were correct. The answer to this question is finished goods, which was item C. Then the second question was, how do we treat the total cost of production of goods completed in the trading account for a manufacturing entity? How do we do that, students? The answer is we add it to the opening stock of finished goods. The selection was B. Then we had a third trivia. Which of the following is not a type of expense that is found in a manufacturing entity's profit and loss account? That is, which of the following is not a type of expense that is found in a manufacturing entity's profit and loss account? Answer, direct expenses. And you would remember from the last class that direct expenses are considered to be a part of our prime cost. Hence, those are taken into consideration in the manufacturing account. Students, please be reminded that for this year, if it so happens to be as planned, the exam will be on multiple choice as well as the school-based assessment. It therefore means that you must spend some time to practice your multiple choice questions. It is very easy to sometimes get a little bit thrown off because you think, hey, it's multiple choice, so I can just simply zip through. It's not always like that. Multiple choice can be tricky. And especially for accounts, you must know the principles. Therefore, I'm imploring you to ensure that you learn all your principles and practice, practice, practice. Remember Choose your answers carefully. Employ the selection process of eliminating that which is totally out, and then contemplate your possible answers and choose your correct one. We're going to further wrap up by focusing on our key points. Key point number 1 emanating out of today's lesson, students, is we take into consideration our stock of finished goods in the trading account. Make sure you have your pen and your paper writing down. 2, there are 2 main changes to a manufacturing entity's trading account when compared to a sole trader's. These are: 1, we take into consideration our stock of finished goods. 2, we must remember to bring down the total cost of production of goods completed and add it to our opening stock of finished goods. Thirdly, administrative, selling, and distribution, as well as financial charges, are the 3 groups of expenses in a manufacturing entity's profit and loss account. Remember also that in order to breeze through the calculation of the manufacturer's total cost of goods sold or finished goods sold, just rally back on the mnemonic: only pretty pet cats rest on neat, comfortable, cozy cushions. We had demonstrated that before. Just write it down and make sure that you learn it. Now, have we achieved our objectives? Let's go through them timely. Objective number 1 was that the student should be able to outline clearly or correctly the items in a manufacturing account. Remember now, we're going to link objective 1 to 2. The items in the manufacturing account are similar to that of those in a sole trader's trading account. It therefore means you start with your sales figure. If there's any returns inwards, you less your returns inwards and you get your net sales. Then, students, you set out to calculate your cost of finished goods sold, opening stock of finished goods, add purchases of finished goods, add carriage inwards on finished goods, minus any returns outwards on finished goods. Then you get your net purchases of finished goods. You add that net purchases figure of finished goods to your opening stock of finished goods. And what do you get? Your cost of finished goods available for sale. You then less your closing stock of finished goods from that, and you get your cost of finished goods sold. You subtract your cost of finished goods sold from your net sales and you have your gross profit. It's not hard, student. All you simply do is try to practice, 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 and remember your key points. That's all today for CSEC accounts.